Most beginners get stuck here. They enter a breakout at the worst possible time, or they ignore breakdown and get trapped in a falling stock. Today, I'm going to teach you the exact difference between a breakout and a breakdown and how to know which side the big players are on. If you master this one concept, your entries become sharper, your stop losses become tighter, and your confidence goes through the roof. Breakouts are where momentum starts. It's the point where buyers finally overpowers sellers. When a price crosses above the resistance, or when a price crosses above the range, or you can say when the price crosses a swing high, or even when a price crosses a trend line, or if it's crossing above from the consolidation process, it creates a breakout. To spot a breakout, look for these four conditions. Even if one is missing, it's a trap. Condition A, strong bullish candle. Breakouts never happen with small candles. A real breakout means there is always a big candle, big clean candle, and there'll be no upper wick. It will be a perfect strong body. And that's the one point you should look out. Condition B is volume confirmation. No volume equals definitely it's a fake breakout. Higher the volume, the big money is the entering. That's the thing you should know. So when there is no volume, do not take an entry. Condition C, previous resistance, if it is tested multiple times, and that's the one you should be looking. The more number of times the resistance is tested, the stronger the breakout would be. Condition 4 or condition D, you can say retest or a continuation. You will see one of the patterns like the breakout happens, then the retest for the resistance level, and then bounce. And that's the continuation of the breakout you should be looking. Breakdown is the exact opposite, but even more powerful, I can say. Why? Because we all know falling moves are faster than the rising moves. Breakdown means when a support breaks or a weak buyers are there, that's the symbol, or when there is a strong selling pressure, when the panic moves, that's the time breakdown happens. You can see the volume spikes on the downside, the red volumes. So that's the time the breakdown is happening. When support breaks and volume confirms it, that's a breakdown. Now we'll go to the next rule. It's like the secret of trap detector. And this is where you differentiate between beginners and professionals. 90% of the beginners fall for traps. You need to identify weak traps. The bull trap or the fake breakout is nothing but price goes above the resistance, but sellers immediately dump and the price closes back inside that resistance line which you're observing. This means breakout is a fake. It happens when institutions just dump the stock. They are looking, on the liquidity part. At the same time, a bear trap or the fake breakdown is the price goes below the support and everyone panics, but big buyers enter and the price closes above. So that's a bear trap. Well, I'll give you now some examples. Well, let me show you the ICICI Bank example for the breakout. And you can see the price was kind of consolidating and kind of a bottomed out here. You can see couple of days the price didn't move, and you can see here one by one candle going up, and the previous high was broken, and this is where you can see the very big candle, full body candle, and the volume also. And from here you can see the price continuously going up. Of course, after this, there was a retracement movement, and again, the breakout continuation you can see here. And this is another typical breakout example you can see. Well, friends, I'll take the example of HDFC Bank for the breakdown. And you can see here the breakdown happening, and you can see the swing lows. And once this broke, and this is where the breakdown happening. You can see volume wise a confirmation of a couple of big candles here compared to the previous ones. And once it crossed the swing low here, and you can see there is a continuation downward movement. And this is a typical breakdown you can see on a stock. Well, now the simple formula is the big candle, or if you are seeing the big candle or the big volume or the multiple resistance test or the clean retest or continuation or the complete candle body without the wick, what you see confirms the breakout. And this is a formula you should be looking at. And at the same time, the breakdown formula goes with a strong red candle with a high volume on the downside, and you will see the support breaking down, and there is a panic wick. And very similar to the breakout here, even here, the breakdown retest happens and the continuation will be there. And the trap detector, you can say, is always check how the candle closes, where it's closing, and avoid these kind of traps. When I learned the difference between a breakout and a breakdown, my accuracy improved instantly. Suddenly, everything became easier: entries, exits, and confidence. Well, friends, if you are interested in knowing about this subject more deeper on the breakout setups, breakdown strategies, retest, confirmation, there are still a lot of things you should know. And I teach all this on the free foundation class where you can register using the link from the description below. Also, don't forget to subscribe to get more videos on this.